Okay. Okay, and we're live. Good morning, everyone, for another episode of the Crypto Hour. As in the past few weeks, there are, the macroeconomic news seem to dominate the investment market, both for crypto and non-crypto assets. But there are also some interesting news that affect the the crypto market specifically. So we'll cover both. We'll start from as usual from the macroeconomic picture, and then we'll go on to crypto. Okay, let me just share my screen. Okay. Okay. So as usual, this is the economic calendar. This is for last week. Okay, so last week was quite, as you can see, it was quite a news-heavy week. Dominated by the interest rates decision from the US, the UK. But in particular, apart from the decisions and the numbers that have been reported, what dominated the week were the press conferences. Okay, so you see here this. On Wednesday, Jerome Powell actually spoke at the end of the, after the funds rate were announced. So the new interest rates were announced as everybody was expecting, 0.25% rise in the interest rates in the US, followed a day later by a raise of 0.5% in the official bank rate in the UK. But really what was interesting was the tone of the press conference. And this is what the markets look at more than the number itself is the main people that speak after the release of the numbers, because they're trying to understand where the wind is blowing, basically. So how could their behavior be in the future, in the next few months? Okay, and although there was like a tough talk from the point of view of a few of the Jerome Powell and from the Bank of England as well, the undertone was that we may not have to go as hard as we think. We may slow down the pace of interest rates, etc., etc. So the markets basically took it as a, free go, pass go and collect the money, really, like you do a monopoly. So meaning that, okay, things are getting better now. We can start, moving money onto riskier assets because the central banks are going to slow down the increase in interest rates. Inflation is getting under control, is going down, etc., etc. So this was for the middle part of the week. But then on Friday, because one thing that I want you to understand is that all these people that make this decision and make the announcements are, in a way, they're all in politics. So they're all politicians in one way or another. So they have to appear as their decisions and whatever they do is in the interest of the people. Although that might not be the main reason why they are in politics, as you might well, speculate. This is what they have to appear to be as a public face. Now, so some of the things that came out last week, where, for example, there was a survey done in the US that showed that more than 58% of the population could not cope with an extra demand, from bills or something like over $8,000. So they wouldn't know where to come up with the money if they had to spend more than $1,000 on, of unforeseen expenses. Okay, so obviously this is something that is worrying all the politicians that are making decisions, especially the financial decisions. Okay, so this was at the forefront of their mind while they were making these speeches. Then on Friday, we have some very buoyant labor reports, which shows that there are a lot of jobs being added, and non-farm employment, and this is kind of like more than double what the market was expecting. So in a way, although the the number is good in the way that means that the economy is still performing quite strongly, at the same time, this puts the people make decisions, economic decisions, in a difficult position because a lot more employment means there's going to be a lot more pressure on wages. An increase in wages obviously fuel inflation, and so the they might need to restrict monetary policy a little bit further before they can slow down with this. Okay, and so this is seen when we have a look on the this is just the dollar index. Okay, as we're showing that the dollar has gone down, steadily since September, October, and because of those kind of like news releases, we can see, if you can have a look here, Wednesday, Thursday, and Friday, the value of the dollar went sharply up because of those announcements on Wednesday. Now instead, as you can see, we turned around this week, and the value of the dollar started going down and pointing downwards again, as we were talking last week, that we're probably aiming towards this area, which would mean a decline of about 3% in the value of the dollar. But from where we are, actually, because we've gone up quite a bit now, from where we are now.
Sorry, Luke, I can't see any charts or anything.
Oh, sorry. Can you see my screen? Strange.
We can.
I can see it.
I can see it.
Let me
No, I
start.
can't see it.
I can see it.
Now I can see you.
Yeah, let's start again.
Yeah,
Can you see now?
Yes, I can see the screen.
Okay,
Yeah.
so this is where last week, after the press releases, the prices went, the dollar went up dramatically. Now instead it started coming down, pointing downwards again. And probably we are aiming for this area here in dark green, which will mean roughly a decline of the price of the dollar of around, between 3 and 4%. Okay, which is very big in currency terms. Okay. So what we saw this week, was last week. Instead, this week, apart from kind of like no news really from Australia, the interest rate rise was as expected. So although there were some people that thought that might be the number announced may be different from expectation, but wasn't the case. But we've had more people talk again. So this week is like a talking head week again. So different members of the the monetary committee were talking, and yesterday as well in the UK, members of the committee were talking as well, and everybody carried on speaking tough about inflation, saying that it might be too early before we start decreasing the pace of interest rate rise and monetary tightening. At the same time, we saw some disagreements in the Monetary Policy Committee in the UK between the people that want to support further interest rate rises and people that want instead to slow down these increases to support the economy. As you can see, just this morning has been announced the GDP for the UK, which is actually kind of as quite a bad number, minus 0.5%. So this UK definitely pointing towards a recession, but so they're starting already to be these discussions in between politicians thinking, okay, yes, fine, the inflation needs to come down, but at the same time, people are suffering right now because the economy is starting to slow down, shed jobs, and et cetera. So puts them in a difficult decision going forward. There have been a lot of talk about this soft landing, which means the inflation slowing down, but at the same time the economy not slowing down too much. I mean, this is the same talk that we were hearing in 2008 before basically the sky fell down. And we had probably the deeper recession we had in the past 20 years. So probably, as I was saying before, there is some more pain to come. This is not up for discussion. This is everybody can see this. The question is when are we going to start to turn around? So what I saw in the beginning of the year, I saw a little bit of excessive optimism, to be honest with you, and which is not justified by the numbers. Okay, so I think we will see at a turn up, as I say, towards end of March, beginning of April, like the end of Q1, really. Once we know pretty well what the final trajectory is going to be for the interest rate rises. Now, at the end of last year, we were expecting interest rates to peak in the US at about 4.9%. Now the expectation is 5.1. So we're still slightly pointing up, and I think there is going to be some more tightening coming before they are pretty much forced to then start printing money again to support the economy. Okay, but this probably will see these higher interest rates now. This is probably going to be the new normal for the next couple of years. So don't expect, if you are renewing a mortgage, for example, don't expect the rates to start coming down quickly in the next few months. It's probably going to be at least, towards the middle of 2024 before we start seeing some significant change in the mortgage market. Okay. So the other thing that you might have seen, and this is just more recent, this is Bitcoin to an hourly chart. Okay, so this is Bitcoin's price, as you can see from where we were last week during this. So this is where we were when we had this session last week. Okay, Friday we were up here. Okay, at about 23,500. Now we're gone down to below 22. What is this? What was caused by? This is apart from partly the first part of the decline, was caused by the macroeconomic picture. So the idea that they might not, although see here originally, look at this and look at the timing of this. This is when Jerome Powell was talking. Okay, so I think everybody thinks, oh, fantastic, now things are going well now, let's, everybody starts putting money into risky assets, and then actually we're not. They're now saying that things are not going to be going up as quickly, and this was the new normal, come down by about, almost like $2,000 in the value of Bitcoin, and this is then more recent, and we'll talk about that in a second, and thinking why that happened. And it's connected to this news. Okay, although it's specific to Kraken, okay, they're saying that they reach a settlement with the SEC of overstaking. Okay, now why did the whole market came down? Because Kraken is one of the more transparent players in as far as crypto exchanges go. But basically, they were, and it's almost like regulation by persecution in a way. Okay, so they were just charged for doing what everybody else does, which basically allowing their users to stake. Oops, sorry, what have I done here? To stake the coins on their platform, and obviously giving them staking rewards, as you would do, yourself if you're staking directly on the blockchain. And they all do it. Kraken, Binance, Coinbase, they all offer staking services. So the reason why the Bitcoin price came down is because it looks like the US is coming down on staking as a service. Okay, which is basically, people depositing their coins on centralized exchanges to get staking rewards. Now, from one point of view, it can be understandable because of what happened with Celsius, what happened with Voyager. The legal position of people that deposit coins in a central exchange is not as strong as a depositor in a bank. But you don't have any protection for your deposits, and also the coins that you deposit in a central exchange are considered as part of the bank side, for part of the crypto exchange assets, and you don't have any special claims to it like you would have in a protection if you had money in the bank. You have some legal protection. That doesn't happen with crypto. You're just a normal creditor. So the worry here is not so much that they're Kraken up to pay 30 million, because that's nothing. They had to also agree to stop offering staking as a service in the US, and and never to do it again, basically. Now, what they're saying is that they hadn't asked for permission to do this. Although, on the other side, if somebody asks you, if you ask Coinbase, how do you ask for permission for a staking service? There isn't a clear path for that. So it's just like asking them for something where the underground registration process hasn't been fully agreed by the authorities. So it's seen by everybody like a worry that the US is coming down heavy against crypto, and it could cause, actually, this could cause a lot of business, a lot of crypto companies to move out from the US and move in other jurisdictions because of kind of the heavy-handed approach that's coming down from certain sides. Now, so you see now this is the commission. This is a commissioner that is, it's probably better known as the crypto mom, okay, because she's a security and exchange commissioner, but at the same time is crypto friendly, and this is, they say, if you read this part, SEC shut down Kraken staking program and counted it as a win for investor, and she disagrees with that. And there are further talks about, people that talked about it, like Brian Armstrong, the CEO of Coinbase. Oops. See, there was no way to register. So using enforcement action to tell people what the law is in an emerging industry is not an efficient or fair way of regulating. Okay, so this has affected the price of Bitcoin because it affects the access to cryptos from the US, which is interesting. But, I mean, crypto will survive this as it has survived many other things, but obviously it does affect the ease of accessing crypto from the US. So this is why we've seen that drop in the Bitcoin price. Now, on the so you see you see here, when you see something like this happening, it just generally is news related, because in a matter of an hour, really, we dropped about $700 in the Bitcoin price, and a little bit further afterwards. But then price seemed to now to have found a new floor at around just below 22,000. Now, although we hear those news, on the other side, we must say that the number of kind of like new investors that are coming into Bitcoin are now starting to grow again. So the number of active users and small users, and this is seen by the number of non-zero address Bitcoin non-zero address wallets. It's starting to grow again, and this is not surprising because we've seen an increase in price in 2023, and so as it normally happens, people want to jump on the bandwagon when things are going well and run away, when things are going badly. So that was kind of like the narrative of the last few days. On the other side, something that has crossed the news as well, you might be aware about Microsoft, Google, and artificial intelligence. So Microsoft has invested heavily in ChatGPT, which is an artificial intelligence interface where you can ask questions the same way you would do a search on Google, but you can ask questions in a more conversational manner, and you get answers that make sense rather than just a list of results. You can actually get responses that you would do from a normal person. So this is considered to be like a big threat to the business, to Google's business, and so they have responded to this move by Microsoft, unveiling their own artificial intelligence. So what has caused this in the crypto world is that anything that's connected with artificial intelligence has surged in price. Okay, so these are things like you might have heard as tokens like AGX, like Fetch.ai, like the graph. So they are, you know, all tokens, they are in a way connected to artificial intelligence. And if we see, where's my CoinGecko? This is the new report. Let me just open CoinGecko, just to show you what happened to some of the tokens. Although, as you can see, the on the last 7 days, most of the tokens are in negative because they've gone down in price. If we see the price, the ones that are gone up, Singularity Net, the graph, Fetch.ai. Okay, so those are the three ones. They are back the trend. And if when we go and look at another one, there's another one is called NewNet, which is another project from Singularity Net as well. They're all gone up significantly. So in 30 days, 372%. Okay. Now, if you look at the more recent thing, this is, I mean, if you're in crypto, and some of you might have had AGIX tokens. So this is a thing you need to pay a little bit attention to, because when you get, this is the last 7 days results. Okay, so they've gone from less than 20 cents to 60 cents. Okay, and now they come back. So when you see something like a parabolic increase in price like this, it always makes sense to, you know, if you have these tokens in your portfolio, take some money off the table and then wait for what normally happens after these things, which is like a correction. We've already seen this is a 50% correction already in 1 day, really. Okay, so and then, you know, if you can sell some towards the top of the market and then buy it back, you will be in a very good place. Okay, so there are often these kind of limited moves in crypto tokens for any particular reason. You know, in this case, it was like news related, and if you can, it's easy to take, you know, to take advantage of this. What you shouldn't do, okay, don't jump on the bandwagon when everybody's going, this thing is going up by whatever 200% in a week, I'm buying. And this is when you end up buying up here, and then, you know, you lose 50% in a matter of hours. Okay, so be careful not to jump on the things, as you know, if you were in it already, that's fine, but don't just, you know, go and jump and buy lots of it now. Okay, moving on. Let's have a look. What have I got? So on a different note, I was saying we will say that the number of Bitcoin addresses are growing, and also the institutional moves are very slow, but we keep getting news about something like traditional players, like this is one of the largest banks in the US, showing that 90% of their clients, institutional clients, are interested in digital assets. So this, as I said to you before, you know, this move, whatever happens in the, you know, whatever the US decides to do from a regulation point of view, this move is not going to be halted, okay, because it's already several years into the making, and all the different blocks that need to be in place for institutions to really start playing with this in a significant way are being put in place as we speak. They've been talking about it for a while. So this is one. There's another news from Germany. There's a small bank called Decker Bank that plans to launch a tokenization platform by 2024. So this is when you're talking about tokenization. Okay, it's tokenizing traditional financial assets. Okay, so they're not talking about property or anything like that, but they're talking about stocks, you know, bonds, etc. So you say bonds, stocks, and funds. Okay, so in order to enable this new token economy. Now, there are several players that are, you know, in trying to come up as one of the leading players in this industry. And I think the word here to see who's be successful or not, I think it will be specializations, as there will be different players that specialize in different things. So, you know, many players now, they are trying to get in the you know, property tokenization space. There will be obviously a multi-trillion-dollar market. And they're completely on a different area, but still they all trying to appear as, you know, technologically savvy. They're trying to attract the new digital customers that they will not already traditionally attracted to the banks, because it's more like people my age and similar that they are grown up with the banks as the main interaction for the financial institution, but the new generations are learning things in a different way. So they are trying to attract some of that demand that they haven't been able to talk to until now. Okay, and definitely we get all these moves, all these traditional players, you know, the banks, the big banks, the funds, etc. They're moving into these. I'm not saying crypto in general, but talking about technology. So the blockchain technology is going to completely revolutionize the way we do things in the next decade. How are we doing for time? We're doing about half an hour. Okay. So I talked about a few more news, and then we're going to have a look at this, which is the CoinGecko, the Crypto 2022 Crypto Industry Report, and we'll look at a few things there. Obviously, we're not going to look at it all in depth because it's over 50 pages, but we'll look at a few highlights from it. You know, as we were talking before of a lot of, and there is something here as well that shows all the. Let me see if I can. So if we see what happened in 2022, so this is after the start of the war in Ukraine, you know, we've had a lot, the DPEG of the Luna stablecoin, you know, 3 Arrows Capital filed for bankruptcy, Celsius filed for bankruptcy, Tornado Cash was sanctioned, and then so we had the FTX obviously in December, and BlockFi again, and Genesis. So all these kind of like bad news have meant that there's a lot of, you know, on all these players, and we also got, it's not here, but Voyager was another one that filed for bankruptcy in 2022. Now, all these, like people, they had money in Celsius, in BlockFi, in FTX, means that there's a lot of Genesis, there's a lot of funds locked into these bankruptcy proceedings that could last for years. Okay, so what happens is that obviously being people think, you know, being entrepreneurial, now they've launched some VCs have launched a marketplace for crypto bankruptcy claims. So if you don't want to, so everybody there's you know, there has funds on one of these platforms that will be represented in a bankruptcy claim. But if you didn't want to wait for the whole bankruptcy to play out, you know, you could potentially sell your claim at one of these marketplaces. Okay, so it's interesting. Obviously, you wouldn't be get anywhere near what you know, the funds you got there. It would be like cents in the dollars, but you know, it's still a potential for people that wanted to get some funds to use straight away. You could sell your claim on at a huge discount. On a different task, what we wanted to show you is a lot of the play in 2023 and going forward is moving from layer 1 to layer 2. What does that mean? In a way, the layer 1 projects, so the Bitcoin, Ethereum, Cardano, Polkadot, etc., and the Solana, are in a way created the infrastructure for project then to launch on their platform. In the same way that, you know, it takes a bit of work before you can have a football field. You know, you have to dig the foundations, you know, plant the grass, you know, put the goals in, etc., before you can go in and play. It's the same thing now. I mean, these blockchains have taken years and they're still developing to have a platform that can be used. And then what is starting to happen now is the activity of, you know, entrepreneurs that are starting to use this platform to then launch their products, their interaction, whatever that may be. Okay, and there's a couple of things I wanted to bring with your attention. You know, one is Polkadot, because it's one of the new ecosystems. Again, they launched last year. Launched the parachains, so like parallel chains that make Polkadot is all about interoperability. you can see interoperability between blockchains now is launched on launch on a central exchange on Bit, which is a South Korean exchange. Well, obviously, whenever these projects launch on centralized exchange, normally there's a jump in price of, in this case, of like 24% in one day, and it's a it's an interesting when layer 2 projects are being listed elsewhere away from the blockchain. It's always a good a good indicator there is interest for these projects outside of the ecosystem. And on a separate, talking about different blockchain, now is Cosmos, which again plays in the same area as Polkadot, in a way, in the interoperability between blockchains. Now they are starting to again release their first layer 2 projects, and this is Dimension that is building a network of rollups, and we're seeing as a rollup that is kind of like a layer 2 on Cosmos, and on Ethereum we've had Optimism and Starknet and Starkware and many different solutions that are aimed at speeding up and the work of the blockchain and making it become cheaper. So this is starting now coming to Cosmos as well, and they're going live next week. Okay, so there's lots of this going on in many different blockchains, and another development, and this is the last before we have another quick look at the report, is in Cardano. Now, Cardano, do you remember the last week they launched the DGED algorithmic blockchain? This is so that one is already live and it's already being listed on one central exchange as well. So this is a new project which is called the USDA stablecoin, which will be the first fully collateralized stablecoin on the Cardano blockchain. So it will be similar to a USDC or USDT, and this is being launched by Emergo, which is one of the regional organizations. They are founders of Cardano, so it's considered like the commercial arm of Cardano. So it's a very well regarded project, and Cardano being Cardano and they doing everything properly. This is going to be from day one is going to be what's it called? Is going to be reported on and accounted for, and every dollar that is deposited actually in a bank account that will be, the USDA will be working with, will have a proof of reserves, and make sure that everybody can see where the funds, because you have token that represents a real world funds. We have to have accountability for those funds, and so everybody can see where they are. I mean, I don't think it's good enough to do what Tether was doing before, where saying that everything is collateralized 100% and then being very shady about showing anybody where this money is. Okay, so this is going to be very good news in the sense that, obviously a stable coin is not an investable asset as such, but it brings liquidity into the blockchain because it makes it easy to get money in and out of the blockchain and into your own, and spend it in the real world, whether it's through your wallet or getting cash out and then transferring that onto your card, etc., etc. And now there's also word, and I think this is I learned this from Jonathan, which I remember will do the usual session at 9:30 on Cardano. So Jonathan, please don't let me ask you every time. Please post the link on the on the chat box for anybody that's interested in knowing more about Cardano. You can have a Cardano focus session every Friday at 9:30. there are rumors that Cardano's fee paying coin on the Cardano blockchain could even change from the ADA to DGED in the future. So it's always at the early stages yet, but it could happen, and that would make it more predictable for people that want to interact on the blockchain, because they know exactly how much it costs. It's not like now, for example, Ethereum, that one day will cost you, $5, the other day will cost you 20, and etc., etc. So it changes very, very quickly. Okay, let me just have a sip of coffee, and then we'll go through the CoinGecko report. Anything before I go into this? Any questions so far on the things that I mentioned? Okay, we'll go through some questions later on. Okay, so this is, by the way, it's on. You can all download it if you like. Okay, it's on CoinGecko. They do a report every quarter and then one at the end of the year. We spoke last week about the ARK Invest report, which covers crypto and other things. Is only crypto related, and these are the kind of things that they cover. Okay, so the market landscape, Bitcoin and Ethereum analysis, decentralized finance, NFTs, and exchanges. Now, as I said, I'm only going to spend about 5 to 10 minutes of this, so I'm not going to cover it extensively, but you can go and download it and on CoinGecko and read it at your leisure. Now, one thing, first of all, just say this shows you what happened in 2022 with stable coins, and you can see the actual total market cap of the stable coins went down by about 16%. This is how money actually left the crypto world to go back into other different assets, and you can see then the people that converted the stable coins back to cash. From the point of view of adoption, though, you can see that the numbers kept going up, and this is showing the Bitcoin and Ethereum addresses. with balances of at least 0.1 Bitcoin or 1 Ethereum, went up from 3.3 to 4.2 million in Bitcoin terms, from 1.3 to 1.7 for Ethereum. Okay, so it keeps growing, and the number of active addresses as well stayed pretty much stable in Bitcoin terms, and Ethereum instead has gone down because of, especially because of a lot of the activity on the Ethereum blockchain was due to NFTs, and as the NFT prices have gone through the floor, gone down extensively in 2022, a lot of the related activity has gone down as well. So we're showing the things that have happened in 2022. These are also some of the hacks that have happened in 2022. So there have been quite a lot, as you can see, quite a lot from quite famous name like crypto.com, Wormhole Bridge, which was a very big one, the Ronin Bridge, again. So you can take the pick. We had the big Harmony Bridge hack as well, and look at how much money was actually stolen from crypto, different assets. We got also a BNB bridge that was hacked. I mean, it's been like a really difficult year from that point of view. It has affected everybody. Now, this is instead the FTX collapse that didn't just obviously include FTX, but a lot of people that were around FTX. So the main one being Solana, for example. And Solana projects they've been affected, but all these other projects were affected in one way or another because they either were invested or they have money deposited in FTX. Okay, so it didn't just the FTX debacle didn't just affect the FTT token, which is the FTX token, but it affects a lot of other projects as well. So going on. So this is, I wanted to show you this because to show you how Bitcoin has done in 2022. Obviously, we all know they went down 64%. It's interesting to see how other asset classes have done. And the two asset classes they have done well in 2022 are simply the dollar and energy, really, crude oil, more than anything else. Anything else has gone down, some more than others, but even gold was down in price in 2022. S&P and the Nasdaq, as you can see, the Nasdaq in particular, representing technology stocks, have lost like 1/3 of its value. But it's not surprising to see Bitcoin losing 64% because it's considered a technology asset as riskier than other technology assets. Okay, so it generally has an elevated delta, which means it moves more than the market. So if the Nasdaq goes up, you will see Bitcoin will go up more than the Nasdaq. If the Nasdaq goes down, Bitcoin will go down more. So this is quite normal to see. But other assets like treasury bonds and even most of the other currencies have been a loser in 2022. So not just one. Here we can see in a graphic way, we can see how things have done. You can see again oil and what was I saying? Oil and dollar doing well, everything else, losing ground. Just move on. And this is instead of talking about DeFi market. As you can see, the market cap went down by almost like 80%. Okay, and this is because of the Terra collapse, because of the FTX, and because of all the other hacks that we've had in crypto. So it's been quite a really difficult year for DeFi, but and as kind of the market has remained stagnant for a few months, and now we're starting to see money starting to flow back into the sector in the last quarter, beginning of 2023. So as you can see, the kind of like a decrease as well, of the interest rates that you could get into DeFi from a high of above 14% to the current more normal rate of less than 3%, which is even less than the equivalent bond, the 1-year bond in the US. And this is to show you as well the difference in where DeFi lives at the moment. Okay, obviously Ethereum has still got the lion's share of the market, with gone between 50 and 59%. As you can see, the Terra has disappeared from this. As you can see, it was like at 1.13% of the market, and then just now kind of non-existent. And now the main players are Ethereum, the Binance Smart Chain, and surprisingly, Tron has been growing steadily with the introduction of a stable coin as well. In this case, grown to about the same size at the moment of the Binance Smart Chain. And then there are other players on a smaller percentage. This is the makeup of the different categories that form DeFi, and you can see here on the right hand side how they all gone down, obviously in percentage terms in 2022, but in terms of market shares, some areas have gone up, some areas have gone down. Now, some things are obvious, thinking about it logically. Decentralized exchanges have gone up in market share because obviously everybody uses them, whether the market is going up and down, you're buying or selling tokens all the time. So that is expected. Oracles as well, because oracles are needed by any project that is in crypto. So if those projects are increasing, they need to use oracles to get data from the real world. So those are things that are gone up, and also derivatives, because also that's part of the kind of trading aspect of it, and it's not direction related. Derivatives work on the way up, on the way down. Interesting to see also insurance going up in market share, because this is a growing area in DeFi as well. So people, they're starting now a lot of funds in crypto. So they're looking for ways of ensuring new products to actually insure their assets. So this is kind of like the last thing I wanted to highlight to you. There is a lot more here, but you can read this in your own time, because it's, you know, otherwise we'll go on for ages, and we're going to kind of death by price charts and graphs. That's that's interesting. The only thing here to show how there's now quite a lot of bridges, that there's still an increased need for moving assets between one blockchain and another, and this is what bridges do. But although there have been many hacks, many problems with bridges in 2022, now because of this, obviously, whenever there is a problem, there is an opportunity, and many projects now are looked at different ways of bridging from one blockchain to another, instead of holding the tokens in a particular place that can be hacked. Just doing, for example, bridging by using the liquidity pools, which doesn't involve any increased risk, because bridging has always been like the riskiest part of crypto. So as you can see, the result of all the problems that there have been will be better products for everybody in the future. Okay, so these are some of the things that you can see in 2022. So things like derivatives products that have gone up in price, new ways of new iteration of famous protocols like Aave, Banco, etc., and cross-chain bridges, as we were saying, that have changed the way they do things, so that they can be more secure and less prone to hacking. And also we had, I don't know if you've seen this, and this is the first wallet, like physical wallet that can be used the same as a ledger or a Trezor, but it's come from a decentralized protocol rather than a centralized entity. So it's kind of like interesting to see. Okay, so let me stop sharing and let's see if we can get some questions. All right, hope I haven't stunned you. Who was sorry, somebody was asking?
Sorry, Luca, it was me. Especially considering you say that the UK's got a GDP of 0.5 minus percent. Why is the FTSE hit all-time highs this year?
That's a good question. That's a good question. So the FTSE, so these are kind of like expectations for the future.
Yeah.
In a way, the price of stocks, and as there was, increased expectation of companies doing better because the monetary conditions were thought of becoming easier. This was the reason why the things are going up. But also just remember that they're going up in nominal terms. Okay, so you need, especially when the interest rates are low, and you want to get a decent return for your money, you need to put your money somewhere.
Mm-hmm.
Okay, and one of the few places they have had where you could shield your assets from inflation was the stock market. So a lot of the growth, I mean, when you see that inflation runs at 10% plus, you would expect, when nothing else changes, the price of shares to go up by at least 10%. Okay, so it is normal for markets to make new highs because basically cash is devaluating all the time. Okay, and you see from the last 40 years, the cash has lost, depending on which currency you're talking about. Generally speaking, we're talking from 90% plus in terms of their value. Okay, so if you have an asset, so if you have a house, that house is still worth probably the same relative price in terms of something that you exchange for it. So you could probably get still the same amount of eggs for a house now as you could in 1975, But
Understood.
in money terms, that's probably like 10 times as much.
But that argument ought to be transferable to the US then and the S&P 500, but that's dropped 20% last year, whereas the FTSE's all-time high.
And that's a differential in inflation rates as well.
I thought we were both about 10%.
No, the UK has got much higher inflation than the US, and this has been the problem because they are thought of not having reacted quickly enough with the tightening of the monetary policy. So there is a lot more money floating around in the UK than there is in the US.
Okay.
No.
Great. Thanks very much.
And the US, just don't forget, they also got the option of the luxury of being used as an international currency, which the pound doesn't have.
Yeah.
So there's a lot of people that hold US dollars simply because they have to buy oil, have to buy commodities, etc., etc. You don't need to hold the pounds to do that.
Okay. Thanks very much.
Okay, you're welcome. Are there questions? No, nobody has anything to ask. Come on, guys.
Well, what's your view of? I suppose. Well, you said Bitcoin's coming down in the next few weeks, month or so.
It's not. No, I never said that. No, I never said that. I said that at the moment, really, everybody is being led by the macroeconomic picture.
Yeah.
So there isn't any anything that's moving independently from that at the moment. Okay, so generally speaking, you look at, if you think about it, if you got money, what do you do with it? What are your options? Okay, so generally from the least attractive option of keeping money in the bank, then you could put it in bonds, and you can put it in otherwise in property or stocks and shares or something like that. So increasing level of risk generally have an increasing level of payout connected to it. Okay, so and if you can see, like, the crypto sits at the top of the risk pyramid in a way, and so it has the the largest swings, so both on the way up and on the way down. Okay, so and you see in the stock market as well, like during a recession, because especially a lot of investment funds have to be invested, so they're not allowed to hold a large percentage of the assets under management in cash. They move funds from sectors that are riskier to sectors that are safer. So during a recession, you see the things that do well generally are utilities, the electricity, water companies, and things like this. Rubbish collection, for example. Rubbish collection companies do very well because you produce rubbish, whether the economy is doing well or not. Daily staples, the things that, your toothpaste, your shampoo, and, the washing products. Those are the kind of things that have to be consumed anyway, irrespective of the economic situation. So those are kind of like areas that do well when the economy is doing badly. Things that are more speculative, and obviously technology is probably the biggest part of this, are very much more volatile, because when people don't have money, that's the first place where they cut back. Okay, because they think, that's a bit risky. Maybe I'll keep my money, under the mattress for a little while, and then put it back in when things are looking better. And that's what's happening right now. So the move in crypto prices haven't been like crypto related, have been like economy related. Okay, and this one I'm saying, we will see a move on the way up as soon as the economy starts ticking up, which will not be until, I would say, at least at the end of this quarter, at the very earliest.
Thank you.
Luca,
Luca,
good morning. I put a question in the chat, but maybe you didn't see it. I am still not so sure about this on and off ramp, how to get from fiat to crypto when the banks are, well, maybe when they turn to CBDC. So I couldn't understand what you meant by the USDA changing this field. Could you maybe reflect a bit on that? How to get our funds to crypto when banks are not doing what we want anymore?
Well, yeah, there's a lot of projects working towards that. I mean, USDA hasn't been launched yet, so it's not an option at the moment. So basically, this is what, at least in talks, they have, something they've read before, is the way that you will simply be able to, deposit, your own currency and take out a stable coin. So it's going to be independently from any bank. For any banking solution. So they will make this on and off ramp easier. But it's not just them. Another one of the main players in this area is Curated, for example, which is the blockchain that's developed the DJED stablecoin. They do a lot of solutions for this sort of business, and for getting enterprises onto the blockchain and so on. So I think you will see a lot of this coming in this year and next year, to simplify the process of on-ramping and off-ramping from crypto. But it's still very new, Cornelia. So I would say just go and look at Okoti's website and start familiarizing. If that's an area of interest with you, that's a very good place to start. Okay, and then once the USDA is launched, then we're going to have, something more definite to say about Cardano. This is kind of like a go and join Jonathan's session, because he will tell you all about that.
Yeah. So do I understand the big line that you have already taken all your funds out of a traditional bank, put them in, let's say, ADA or wherever, and that will allow you to get anywhere, just like if it were a bank. But first, you have to have taken all your funds from the bank already in crypto, in the ways we do it now, via a central exchange or via a decentralized exchange. So it goes out
Not
from the principle.
I mean, Cornelia, we at the moment, we're in the real world, and everybody will need some funds in the bank as well. What I have done in the past couple of years, I've basically put all my value in assets rather than in cash, because of big devaluation in asset prices. So this is not in one asset class. It's not necessarily, or crypto is one of the asset classes that I'm invested in, but also more traditional ones. So as you might have done as well, precious metals, property, stocks and shares, different assets. So that's, as you're saying, I don't trust, holding my money in the bank for the long term, but in the short term, you still to have some working capital available to function.
Yeah, but my biggest worry is that to get back to, if you want to change your, let's say, your profile, how you put things in the different asset classes, so you want to change your asset allocation, then you still need to go back to the bank. And if that were to be a CBDC bank, how do I ever get, because the crypto way is not ready yet, so how do you get your freedom back to freely move from different asset classes without the bank?
Well, at the moment, it's not 100%. I mean, there are ways. For example, you can spend your crypto directly, and that is getting more and more accepted, as more retailers and that take crypto directly as a payment, or through a card that's connected with directly with your wallet. So there are ways of doing that already. You just have to.
Let's for you.
Yeah.
Let's say if you have your property, real stone, you want to sell that, and I think there is not anyone who will let you allow to well, maybe you could ask him to pay you in Bitcoin. That's what you could ask, but that's a lot that will make the market a lot smaller. So I'm really talking about the big amounts, how to move these freely in this CBDC threatened world.
I don't see what this is CBDC threatened world, because it's like this. You already live in a CBDC world, and what do you think the money that you have in the bank is a digital asset? So do you think that once the CBDC gets launched, as they were talking about this week, they were talking about a digital pound, do you think that things will change? It will just be an acceleration of what we already have now. So nothing will change from that point of view. The CBDC is not going to be a new product. It's what we already have now. They're going to do without, in the end, they're going to get rid of cash, which is the one way that we still have to transact without giving anybody else any money. And they're going to make that impossible, so that every time you transact, they collect part of the fee, because whenever you have a card transaction, you might not pay anything extra, but the retailer does. So you do the same, you do exchanges 50 times, and the value is being transferred from the population to the provider of the service instead of the owner of the goods. So these are all like structures that have been put in place since the 1971, when we went off the gold standard, and it's been basically a huge transfer of value from let's say small people to the establishment.
Yeah, I understand, but maybe my fear for the CBDC is, for me, CBDC world means that the government will just take everything, that property rights have gone completely away, that they will just supply you with, you may have 20K, 24K, but the rest is, non-accessible.
That's already happening. What you described is already happening. In a bigger part is already happened. So there is very little left that we have control of. So this is what we're talking. Obviously, there are certain things that you can do. You can move funds. You can send $1 billion worth of Bitcoin to somebody else in minutes. That's not a problem. What the problem is that there are some transactions, obviously, that require some regulatory compliance. So if at least you can sell a property on the blockchain in Dubai, but you can't do it in the UK yet, for example, or in Europe, because there are steps to go through. They are not being integrated with the concept of cryptocurrency and blockchain. So those are things that may happen in the near future, but there are lots of things that need to be discussed. They need to be discussed with the authorities, because until that system is changed, obviously you can pay with something in a different way, but you still, for example, if you sell a house, you still need to be registered on the on the land registry to transfer the the property from one person to another. So all these things, I'm saying, the tokenization is not going to happen tomorrow, but it's a process that's already started and will proceed and get faster and faster. If you want to have your funds safe, then holding them in a wallet, it's still probably the best place to hold your funds. It might not be so easy yet at the moment to transfer them, to spend them, but every month we'll get new use cases, and it becomes easier to then use that and not having to touch another bank again.
Okay, thank you very much.
You're welcome. Okay, if there is any last minute question, I'm happy to take it. Otherwise, we'll adjourn for another week. Anybody has a burning question? No? Okay, Jonathan, have you...
Sorry, Luca, can I just ask a question? It's Carol here, after my demise of last week's wallets, etc. I've been doing a bit of research on the CBDC. What are the coins that are backing this? I believe that they're using blockchain. That's correct. Is it XRP and XLM? Would they be good coins to invest in because of the new banking that's coming in?
Well, those are services. So when the CBDCs are launched, obviously they will need some. Some may even try to do their own blockchain, but probably they're going to use existing platforms. So XRP and XLM are two of them, but the one probably that could emerge as one of the strongest ones is Algorand.
Because sorry?
Algorand.
Okay. Yep.
In the CBDC sector. But yes, I mean, obviously they will have a service that they will offer to nation states but not necessarily connected to that. I mean, Cardano could be, has the potential to do that as well, and many other blockchains have got the potential to do it. What XRP and XLM have done, they specialized in the cross-border transfers, but it's not exclusive to them. They haven't got anything special the other blockchains can do. What they have got is the industry connections. Okay, so they started making agreements between regional providers so that they can use their system to transfer value instead of another one. But really, the underlying technology is not particularly amazing. They can say that they have to use XLM or XRP to do this. They can use any other blockchain, to be honest with you.
Cool, thanks.
All right, no problem. Okay, so thank you again for watching this. It's coming in on this nice Friday morning. So I wish you a fantastic weekend, and I direct you to Jonathan's session that will be starting shortly on Discord. And if you want the link for that, is in the chat. So make sure that you click on that if you want to attend it before I end this call. Okay, so goodbye, everyone. Have a great weekend. Go and get some fresh air. Move away from the computer for a couple of days.
Thanks so much, Luca. Have a great day. Thanks a lot.
I'll see you again next week. Okay, goodbye, everyone.
Bye.
Thank you.